going to talk about now position sizing for covered calls. So this is really important, and we would remind you of your asset allocation in the courses that you did in portfolio building and stock picking. Roughly we said about 5% into value stocks and no more than 10% into the mega cap high dividend stocks. So the temptations with the covered calls is to increase your holding in a stock in order to sell the calls. So if you do this, you're opening yourself up to unique risks associated with those individual stocks, which could have a negative impact on your portfolio over the medium to longer term. So what we would say is to stay diligent. Let us give you an example. So let's say you have a portfolio that's worth $25,000. And this is how your asset allocation might go. You would stay with your 5% allocation to value stocks, which means it's 1,250 per stock can be allocated there. And then you could allocate 10% to the mega cap high dividend stocks, which will be 2,500 per stock there. So remember, with the covered call, you need to own at least 100 shares in order to sell a covered call. So when you convert that back into the value stocks, if you only have $1,250 to invest, you divide that by 100 because you need to have 100 shares of it. You could only invest in a stock that's worth $12.50. So this is critically important for you in order to keep your portfolio balanced. On the mega cap side, you could invest 2,500 divided by 100. You could invest into stocks that are valued at $25 per share. So this is just to give you an example of how to keep your position sizing in check. Because you've seen now the power of the covered call strategy, the temptation for you is to start now increasing your shareholding in stocks in order to be able to sell call options. That's absolutely the wrong thing to do for you.